Hey guys, welcome to another video brought to you by Total Control Traders. Alright, let's get right into it. We got a few tickers to go through today and some to catch up from the last video that forgot to cover. The hot tickers. GME, meme stocks threw me off. Alright, let's get into it. First one, SPX, same as usual. So SPX, we were, as mentioned in the last couple videos, we were tracking this upper trend line as well as this lower trend line potential of a rising wedge. And we saw 1, 2, 3, 4 rejections from this upper trend line before recent. And today we are seeing, or yesterday, we're seeing a 5th rejection. Now this is a little bit of a concern. A little bit of a red flag from here, because if we were to draw from the last high to the recent rejection, there is a bear divergence on the daily. So there is a bear divergence on the daily, and the last time we formed the bear divergence, there was a decent day of pullback, just slightly losing that daily 8. So that could be the same scenario, you know, big dip, V-shape, completely into new highs, 1-to-1 extension target, bear divergence, coming back to revisit the daily 8 before slow grinding up. So daily 8 was the guide. Now this time, let's see, big dip or a decent dip. We didn't get to the lower trend line, bounce from the 0.5, decent dip, complete V-shape, 1-to-1 extension, and now we're seeing bear divergence. So tomorrow, in order for us to see this same pattern as last time, we're gonna have to hold the daily 8 tomorrow. See some sort of a similar candle as July 28th. So slight concern for now. Gonna have to see what tomorrow looks like. If we see follow through tomorrow from the bears, if we see follow through tomorrow from the bears, and losing closing under the daily 8, what I would expect is coming back to visit this 1-to-1 extension target where we rejected from. We can see lots of rejections here and then became support. 1, 2, 3, 4 supports. That very notable price at 4424.8, which also lines up, if you were to draw a fib from the low to the high, this V shape, it also lines up with the 0.5. So that would be the price that I'd be looking at if the daily 8 is lost tomorrow. Now, next is NAS. So similar idea, this trend line that we were tracking before, multiple supports and became resistance, lost it, immediate back test, and then came back down to the GP bounce, complete V shape, and now we're rejecting from that trend line again. We did not make it. We're unable to make it to the 1-to-1 extension target from the low to the high to this higher low, GP bounce. Unable to make it to that 1-to-1 extension of 15,443, but it does look relatively a little bit stronger than SPX because we are not at the daily 8 yet. Both cases, SPX and NAS, there is significant bear volume that's showing up. NAS is a little bit stronger in another sense that there is no daily bear divergence. So relatively notable bear volume on SPX as well. Next is RUS. All right, RUS, unable to make it to the GP, but we were right about touch. Where did I draw it? Okay, let's actually draw it to here. Yeah, that makes more sense. So this is what, 2252.5, 225. Okay, just under. Regardless, we made it to roughly about the bottom of that key zone before a rejection, spinning top candle. That was a reversal potential. And yesterday we sold our TNAs right near that top, right near that bottom of the key zone. It was a, sometimes you just gotta decide whether if you want to take profits or you want to wait for that little bit more of a higher potential right here within that GP where we saw 3 rejections. There was a chance that we go a little bit higher, but ultimately it comes down to, is the risk to reward worth it there? So the way I saw it, some weakness started showing up at the bottom of the key zone, and risk to reward did not justify holding it to the GP. So we sold the TNA right near the top there, and today we entered TZA, which is triple leverage of Russell bears. So far we are in the greens, loaded up near the bounce of the day. So we loaded up right here. No, it was hourly. So we loaded up right on the hourly 8, slight wick over it, and from there have seen increasing bearish action, increasing volume after decreasing bull volume. That was an amazing play so far. Now the key to lose for bears, hourly is already in a bearish trend, meaning 30-minute is already in bearish trend as well. This, for bulls, this is the must hold. 22.10, that is the must hold for bulls. If that is lost, we will likely be looking at 4-hour trend reversal. It might actually, depending on how you look at it. No, 4-hour trend reversal would not. This is, personally, I would consider this a whole move because there was no higher low formed. So as mentioned in previous videos, we are looking at a formation of 4-hour higher low coming in. Now let's determine where that 4-hour higher low might be settled at. So from the low to the high, GP is relatively low. 0.382 somewhat makes sense. It lines up with that inner wedge lower trend line. And aside from that, not seeing a whole lot. Not seeing a whole lot of support. Bear volume is nothing crazy yet. Ideally, we want to hold the 0.382. Or at least the inner wedge lower trend line in order to see a daily trend reversal from here. Lower low, lower high, make a higher low. If we were to bounce from the 0.382, the chart would be really strong. Even if we were to come down to the GP, that is still okay. Ideally 0.5 or 0.382. All right, next is Dow. Did not make a new all-time high. We bounce or we reject it from interesting. Okay, let's try this point. Nope. All right, so this kind of interesting. It's not respecting the fibs on this last move. Notable lower trend line. This is now the new money line. We've seen one almost touch. Well, I guess depending on how you draw it. That would still work too. Yeah, so 1, 2, 3, 4, 5 bounces from this trend line already. Did not respect the fib on the bounce. Went past the 0.786. Unable to make new all-time high. And let's so from the low, this doesn't look great. From the low to the high, 0.382 somewhat makes sense. There is a chance that we could come back to GP depending on how long this is going to take. So if this is a daily trend reversal, because there is no daily bearish divergence on Dow, if this is a daily trend reversal, we could be looking at new lows. Specifically on Dow, what I can see happening is from here we slowly, so tomorrow we go lower, come back to test the daily 8, and then most ideal entry and a bounce. I would think a bounce would be making straight higher high. So possible scenario here, what I'm looking at for Dow, this would be the most ideal entry right here. GP lining up with the money line. Those are the easy money made on the money line. And that's why it's called money line, or that's why I call it now. I now call it money line. Next is Bitcoin. Okay, so last time we looked at it, there's a couple possible scenarios going to the 0.786 or just coming back down to retest the line before going back up to GP again. So far, it looks like scenario number 2. Yeah, scenario number 2 is working out. Gonna have to give it a couple more days to see whether if we come back down to touch this confluence of the top of the key zone and as well as the money line. Let's see. I'm feeling like there's a notable level here. So we're going to see a rejection right there. This low to this where we rejected from on Bitcoin. All right, not seeing a zone. So that 54.27 is very notable price point. Supported from back here and rejected from here. It doesn't look like it's that strong of a support resistance because there's only essentially 2 touches to support resistance. Aside from that, keep a watch on this Bitcoin. I'm not seeing any opportunities as of yet. All right, next is HIVE. We're gonna take a look at US dollar as well. So HIVE broke over 1-to-1 extension rejection, GP bounce. Now there's a potential they're going to form a weekly bull flag or a weekly bull pennant. From the looks of it, I would anticipate a weekly bull pennant just because the way this is forming out right now. We're going to have to get a couple more touches on this, but this is a possible scenario on HIVE. Next is US dollars. No clear trend line. So this is now the must hold line, aka money line. This is the long term. 1, 2, 3, 4 bounces. Okay. Not seeing any significant red flags from a standpoint of US dollars. It is just slowly grinding up. Let's see if there's a short-term trend line here. That does make sense, depending on how you draw it. Technically, this one would make more sense. One, you see how many wicks? You see how many wicks goes to that trend line? 1, 2, 3, 4, 5 touches, 5 wicks. So potential of losing momentum on US dollars. But as the market pulls back, we can see that today we are rising. US dollar is rising. Let's see if there's another lower trend line here short term wise. No, there isn't. So that's already been lost. All right, so that's the only trend line we're looking at for US dollars. Aside from that, there's nothing really notable. There's no notable bear or bullish action. It's just a slow grind up so far. We did break over this key resistance from previous rejection, but lack of follow through so far. Immediate shooting star formation with follow through. All right, next is the hot tickers. Let's take a look at Tesla. Hey, look at that. It's almost working out. We were unable to make it. So similar to Russ, we were unable to make it to the previous high. The bounce only got to just under that previous high, just under the key zone. Didn't touch it. And now we're revisiting this daily 8 and the support of 700. Slight wick from just under 700. Now this scenario now I'm thinking it's a little bit less likely to work out immediately, such as this. It is more likely to work out maybe like that. Well, let's run a fib. Let's run a fib. GP 0.5. Nope, that doesn't make sense either. Okay, so that somewhat makes sense. So what could potentially happen from here is something more like that. So we'll come back down depending on how far the market pulls and whether if there's relative strength within Tesla. From what I saw today, there wasn't any relative strength today, at least from Tesla. If there isn't, we could be pulling back to the GP again, and this is the money line, the money line. Short-term money line. We could be pulling back to the GP, which lines up with over here. So there's a possible scenario pulling back to here before a bounce up, but there's also right here. Ideally, bulls want to hold this 690 area in order to see a move into that 1-to-1 extension target of 774. No significant red flags until that 650 is lost. All right, next is Airbnb. So one of the tickers that we forgot to cover, I forgot to cover on Tuesday. Airbnb, huge volume, huge price action on, what is this, Wednesday, Tuesday? On Tuesday, big volume coming in. So the bounce was strong. We held the 0.5, and then from there we started seeing reversal, daily trend change, breaking over that key resistance of 152.70, and now we're seeing a rejection from the GP. Did not make it to the key zone, unfortunately, but we are seeing a rejection from the GP just at 163. And now, originally, so today in the chat, I marked this point as potential add area, right on that daily 8, right on that previous support. So we are back testing, closing right on that previous support, 3 cents off. You can see 152.70 to 152.73. There is a potential based on how far we pull back today. Volume is not that crazy, nothing crazy on the bear volume, but based on the price action, there is a chance that we can pull back to this GP before a next leg move up. So in terms of relative strength, I would actually say it's today was relative weakness. Volume is actually relative strength. So even if you're not in, first entry at this 152.70 is decent. Most ideal entry might be around the GP. Gonna have to see tomorrow if there's follow through. If we start seeing reversal from here, I will be adding to the core position. All right, next is Nvidia. So Airbnb, one of the top watches, number one of the top watch. Going into tomorrow and next week. All right, next is Nvidia. Hey, look at that. So remember how, for those of you that watched Monday's video, new all-time high break, a little bit of a lack of follow-through. So I was looking at this, the 1-to-1 extension is really far away. So if we were to draw at 1-to-1 extension target, we're looking at 252. And with the stall, the immediate stall after a new all-time high, the potential is a little bit less likely. I mean, volume so far on the bear volume looks really great. Bull volume looks good too for bull plays. Meaning, there's a potential we can just break right through this. In consideration to the market pulling back, there is slight relative strength on Nvidia. We are seeing a rejection from GP, the 1-to-GP, 1-to-GP extension target, as anticipated because the 1-to-1 is fairly far. So slight rejection from here right now. Today is just an inside bar. Tomorrow, if we start seeing increasing bear volume, there is a potential that we're going to see a daily higher low before a next leg move up. But this Nvidia is a momentum play, even if we were to come back to backtest this previous high, just under the 0.382 to 08.75 before a next leg move up. That would make complete sense. Daily is not overbought. It's 4-hour overbought. Nope. No time frame is overbought, so Nvidia actually looks very healthy consolidation right now. All right, next is TKAT. What an amazing trade on TKAT. So even though we missed the money line on this, This was one of my favorite setups. Tuesday, was it Tuesday? Monday, Tuesday kind of. I think I noticed on Tuesday. So we missed it last Friday, and then I don't think I saw it on Monday. I got a notification on Tuesday based on the move, but by the time I saw it, it was, let's take a look. This was the close. Nope. By the time I saw it, it was right about here, 50-some%. And I looked at the chart, so I drew all this. These were all new from Tuesday. Looked at the chart, money line, touch on money line on the daily, and huge bull divergence on the daily. The chart looks amazing for continuation. So even though there was a huge upper wick, did not enter when I first looked at it. Decided to put in a little bit more work before entering. So looking at this, there was a potential of rejection because the bear was already starting to show up when I saw it. So bear started showing up and then entered near that end of day. Next day was a gap down, immediate buy up, continuation, and then sold, can't remember where, but then it started forming a 30-minute bull flag. Next day, same idea, gap down again, so we bought towards that near that end of day again. And then next day was gap down. Today was gap down, immediate buy up again, and then sold. This one was just under 13, just under the halt that came in. So just under 13. This candle alone, I think we bought it 1070. So right about here, 20% trade from just overnight swing basically. And now we are seeing losing of that 30-minute 8, very notable. Losing momentum. RSI is cooling off. Daily RSI is not overbought yet. Huge upper wick. That upper wick is really concerning, and we did get to the GP, rejecting from the GP, decreasing bull volume, and now we're closing just under yesterday's closing price. With this, if you are not in, you want to play, this technically could be a shooting star candle. I will wait for that daily 8 to catch up. If not, then if you want in like right now, probably play reduced sizing. In the sense of what I'm seeing on this chart, there is going to be a whole lot more room to move. Ultimately, that's the target that I'm looking at before an actual rejection is this GP from this last drop. Most recent drop, GP lining up with a key zone right around $17. That would be the target, and that's what I mean. You know, even if you enter right now, $10, $11, there is still 50-some% room to move before I can see a real hard rejection. All right, next is Amazon. Amazon, it's one of the 2 or 3 charts with relative strength that I noticed today. So keep your eyes on Amazon as market sets higher lows and then potentially is going to set a higher high. Amazon should see decent move. Low bear volume yesterday and more bull volume today, but on a decreasing sense. Yeah, in the decreasing sense, we ultimately lost that GP without follow through, lost that key trend line without follow through as well. So from here, what I can see happening is if market continues to pull back, we either revisit the daily 8 or we revisit the trend line, making a higher low, before a next leg move up to this resistance, and then making another higher low to probably somewhere around here into gap fill, a very minimum right there. That's what I'm thinking potentially could happen. Scenario number 1. Scenario number 2 is just a matter of moving this kind of thing. but I don't see Amazon making new lows going past this previous low of 31.75. Also noticed a notable price at just under 3,400 support, and unable to touch but somewhat resistance here. All right, next is Roku. So this is the scenario that we drew out on Monday's video. Wow, it could play out perfectly. Well, not the day wise, but not the timing wise, but price action wise. So on Monday's video, we said likely to go up to this previous support resistance of, what is that, 363.44. Not that strong of a support resistance. Rejection here, chopped around, rejection here, support. So what we are seeing since Monday's video was going up to that resistance, rejection, and now today huge upper wick on increasing bear volume. So the chance of this working out is now increased. If we do, regardless of what's going to happen, as long as we get to this GP and touch that money line, I will be taking a position with a stop. This could be a double bottom as well, depending on how long it takes for us to get there. 340. Hey, my alerts are gone. All right, so we're gonna set an alert just above 340, say around 342. That makes sense. All right, so keep your eyes on Roku. Most ideal entry, possible most ideal entry coming up with an easy stop just under 340. You could give it a little bit more room and place it just under this top of a key zone, 336, just depending on how long you want to hold the position. But I can see this being an easy play showing up. Roku, second, third of the top watch. One of the three. Okay, next is mRNA. Okay, we drew this out not on this day. Okay, so we drew this out last week, sometime last week. Mentioned the possible scenario of ABC correction. And we've seen A. There's relative strength today, but it is an inside bar today. B is we are seeing rejection. So this, in order to see any further bull movement, we're gonna need to break that 413.30 where we saw double rejection already, almost a triple top. And from there, if we see unable to break, right now it's sideways, kind of a rising wedge. If unable to break this part, I can see a scenario where we come back down to this GP along this short-term trend line. So keep your eyes on Moderna, not on my personal top watch though, not one of the top watches. Next is PLTR. All right, PLTR, really like the chart, still not losing. Daily 8, we lost it ever so slightly, but this trend line, this upper trend line of the previous channel is the main thing I'm watching. I don't want to see a close under this upper trend line. If that happens, I will consider stopping out of position, but really like what the chart is doing right now. Essentially, it is still a daily bull flag. If we don't lose that daily 8, key to break, the way it stands now, key to break is going to be between these two, 25.75 as well as 24.45. Break and close over or under. Okay. Next is Dkng. So made a boo-boo on this one. Had a little screw up. We saw this Gartley pattern and it was amazing. It was money line touch with daily bull divergence. Let's actually draw that bull divergence out. Yeah, with daily bull divergence. So three big reasons to hold this trade. However, on the last consolidation, we lost the daily 8 and we sold just under the daily 8. I think it was somewhere here on the open of this one. No, it was somewhere here. And essentially what happened was we held the 0.5 and bounced from there. So if you were, I wasn't paying close attention to this, but if you were paying close attention to this chart, on the loss of 88, held the 0.5 sideways for 3 days, and then you started seeing some volume come in on Monday. Yeah, Monday it was increasing volume, getting over that resistance again. Tuesday was confirmation that you should be entering because it's increasing volume again and breaking over this resistance. And now we're seeing pulling back consolidation with the market, unable to make it to GP, leaving some room for further run. The daily did get almost overbought. Yeah, Dkng, I can see this running a little bit. So daily, a little bit more. Daily trend has changed now. Lower high, higher low, higher high, higher low, higher high. And we're looking at a higher low from here. Went straight past the 1-to-1 extension target. Rejecting from the 1-to-2. So the GP might make sense on this pullback. It'd be just above or just below this previous high. 0.5 would make sense too. I like what we're seeing on 0.5. So 0.5 is right on that lower part of the key zone, confluence area. Small first entry if you're not in, and addition would be right around that GP. Okay, next is U. I don't usually, this is rare to see. I don't usually draw a straight line down kind of thing. But anyways, what I'm looking at the chart now is increasing bear volume, and we set a lower high. So there's a potential for a lower low to come now. Now, in the sense of the lower low, 0.5. 0.5 somewhat lines up with things. So it could be over here. But in order to get a most ideal entry from this money line, we're going to need to drop quite a bit more into this triple confluence area, this support 105.81 GP as well as money line. Ideally, I want to see it give us an entry right around there. But we could just bounce from the 0.5. Okay, next is UPST. All right, UPST. Potential long-term channel forming with the money line down below and long-term trend line up above. We are now seeing a third rejection from this long-term upper trend line, and 1-to-1 extension target rejection from there. Overshot a little bit, which is very normal, and decreasing volume. I would think that this is the top now with almost a shooting star candle, and see, 0.5 would make sense. A retracement to the 0.5. The only concern I have is there is a gap left behind. So what could happen is from here we see, yeah, there can be a bounce here. A bounce here to and then another bounce. Gap fill is lower, so there is a chance of this happening. UPST, amazing chart, upward channel, but you do not want to be buying at the upper trend line of a long-term rising channel. Okay, next is, last but not least, Reg. So now that we stopped playing Score, actually let's take a look at Score. Score is kind of interesting because we did make new all-time high, or not all-time, new highs, surpassing the purchase price. So I found this very interesting. We did discuss that, you know, on this daily, this touch of the daily 8, it was basically free money because the buyout price is about 34. Yeah, about 34. So from here, if you were to have gone in the GP to 34 alone, 34, you're looking at 8% gain. However, we did get past that buyout price now. So this is kind of interesting. What I'm thinking is potentially due to sports season coming in. So a lot of the betting stocks are running. Dkng, Penn, Score, Bragg. Now let's take a look at Bragg. Bragg, ooh, kind of sad, but not really. Still okay. Because when I saw this chart, really liked the setup. Long-term trend line, or technically short-term, the way we're looking at it. Anyways, long-term rejection trend line 1, 2, multiple rejections, another rejection before getting over it. So this trend line was key, and we saw a almost back test. Volume started coming in. I really liked the chart when I looked at it on Tuesday. Yeah, Tuesday. Pretty sure I discussed it on Tuesday. The plan was to buy the open on Wednesday, yesterday. I wanted to buy the open on Wednesday, but what ended up happening was the gap up open threw me off. It was a gap up and run scenario based on there's news that Bragg is going to be uplisted to NASDAQ. Part of the reason why it's running so hard. And regardless, got in on the break of this key trend line that we saw previous, multiple supports, multiple rejections, became support again right here, and then became rejection again right here. So this is a very key trend line. I just call it long-term. Money line technically is down here. Long-term trend line, very key. On the break of this, 1260. So even with that entry right now, we are still green, and I'm not seeing significant red flags on this. We did break over multiple resistances that we want to see break. From here, we are closing. Yesterday we closed above the GP. Today we're closing back down in the GP. It is running quite relatively fast, so just mind your sizing on your first entry, and my sizing is about a quarter on this first entry, and upon a higher low, wherever that comes in at, we'll be entering, adding potentially half position. Okay, so that's it for today. Hope you guys enjoyed the video. Let me know what tickers you're watching. Let me know what tickers is on your radar that you are ready to buy the dip on this pullback. We're looking at 4-hour higher low, and make sure to get your homework done beforehand. If you found our content helpful and your friends, family might benefit, really appreciate if you share our channel. And again, thank you for watching our video. Thank you for subscribing. I will see you in the next video.